officially live on YouTube. Today is the Thursday edition of the Not Your Average Investor Show.
Week.
We're going over some inventory. We're talking about some breaking news. I'm your host, Pablo Gonzalez. GC is not with us today. He is on a field trip with his daughter.
Yes.
But we've got something special today. She is the original content creator over here at JWB. She is also the integrator of all this pie. Everything that we're doing would not exist if Kate wasn't behind the scenes, pulling the levers up and down, formerly known as Sales Kate, then Marketing Kate. Now she is manager of sales and marketing. Kate Sutherland, welcome to the show, Kate.
Thank you so much. What an intro.
Yeah, well,
Yeah.
You deserve it.
I appreciate that very much.
All right. And as always, we have our amazing community manager in the chat, making sure that you get what you need. We call her MTM because she brings us the moments that matter. And because her name is Madison the Magnificent. Say hello, Madison.
Hi, everybody.
And if you're joining us on YouTube right now and you're live, love having you there. If you're watching it on the future on YouTube, listening to us to the podcast, we do this thing live on Tuesdays and Thursdays, and it's an even better experience when you go to NYAIS.com, register there, put it on the calendar, see if you make some time for us, make a friend in the chat, and be what part of what, Kate?
The roll call.
We got John Hending, our leadoff batter, leading us off. We got our MVP. Lee Bishop. Kate, I'm going to test Kate with every single one of these. We got a deep shot.
The name or do an action?
Either one,
Okay.
either one, whatever you do. As long
Ringleader.
just not yet, Kate. You're doing it wrong.
Manatee. Ringleader. Tip of the hat. They're early birds.
This is so good. This is so good. All right, we got a deep shot with a good morning, good afternoon, JWB. We got Walt Hart in the house from, I believe, Walt's from Middleburg, if I remember correctly. We got Andrew Barnhill.
The ringleader.
The ringleader. Yeah, that's right. Setting up. We got the man that everybody knows. Noah Randari. There you go. I love it. From California. We got Big Papa. We love it when he calls in Big Papa.
Hey, Jay.
Jay Cohen, Gregg's
He was at
dad.
the golf tournament on Monday.
He was at the golf tournament.
Greg didn't even know at the beginning.
He didn't even know. He didn't even know. We got Dean Curry in the house. You said his nickname earlier.
He's the early bird.
He's the early bird.
Just
Yeah,
love
yeah.
being in there.
We got JC in the house checking in. I'm not sure. JC, welcome to the show. I know that I've seen this before, and I feel like it's a name that's just not fully spelled, and I know your name. We got Leo Faraganan.
No.
Faraganan.
No.
We got Marilyn Cotterman from Homosassa, Florida.
Home of the
Home of the
manatees.
manatees. Everybody knows. Everybody knows about. That's easy because everybody in the world knows about Homosassa, Florida.
So true.
So
Yeah,
that's not
absolutely.
Really. We got the our regulars, the second family of the Not Your Average Investor Show, Gary and Rosalind Righty from Marietta, California.
I thought you were going to give a tip of the hat there, but you were just itching your forehead.
We salute you, second family. Good to have you on board. We got the first family of the Not Your Average Investor Show, the patriarch, Ken, and the matriarch, Carolyn, Malene. We salute you. We salute you. Yes, yes. This is awesome.
We would not be very good at charades, Pablo.
I think you're doing pretty good.
Pictionary, maybe?
Maybe. We got the karaoke witness, Deborah Schwartz. I don't know if that's a newer joke.
Yeah, and I didn't get to see that.
You didn't get to see.
No, I wasn't a part of that, unfortunately.
No. We got right along Raj Bantu. We got Aaron O'Neill. Into the lights, Aaron O'Neill. Okay, get on it. Come on.
So sorry. You're really carrying us though.
I'm trying. This is what I try to do. All right. We got everybody checked in here in the roll call. Love to have you all.
You almost nailed it. Thank you, Lee. That's so close.
You nailed a good amount. We nailed a good amount.
Yeah.
All right. Well, anyways, now good news for you, Kate, is that we head into my favorite segment of the week, which is when Madison shares good news. What's the good news, Madison?
Hi, everybody. So last week we shared some not so great news that one of our JWB teammates that we love so much was diagnosed with cancer and unfortunately had to resign from his position. And we reached out to the community and asked for your help, sending thoughts, prayers, and then also if you were able to contribute to his GoFundMe. The good news in this is that you guys showed up again and we together, everybody raised over $3,500 for Alberto and his family. So thank you guys again. You're always, anytime we need something, we come to you guys and you never not show up. So thank you guys a lot. It doesn't only mean a lot to us, but it means the world to Alberto and his family.
That's awesome. That's awesome. When I saw the email come through of Alberto with $3,300, right? Like it was highlighted as my team is my family, right? Like we talk a lot about the core value of under promise, over deliver. You want to talk a little bit about that? My team is my family core value.
Yeah, my goodness. It's it is something that is so incredibly special when you stop looking at the team around you as like, these are my coworkers,
Mm.
and we are truly just ingrained from the moment we step foot in here to just be a family and rely on each other and support each other and show up in moments of need, celebrate each other's wins, and just, it is true. It's a family. And so to have a moment like this where you have a teammate in need, in pain, to be able to show up for them, and then to ask a community too, who is now becoming a part of that family, right? So it's just it's so beautiful. And it is something that is so near and dear to our hearts. So I really appreciate everybody that could contribute, even if it wasn't financially, the prayers, the thoughts, all of that means so much. And I know Alberto feels it too. So thank you.
100%, 100%. Madison, thank you for that good news. That
Of
was
course.
awesome. All right, Kate. Well, I guess, are you ready for your first POT dubs here? You ready to analyze the property? Because we got breaking news first, Kate. What's the breaking news?
What do I do with my hands? There's so much breaking news. Okay, so something super exciting for us is JWB just acquired a new property management company, which means we just onboarded an additional 300 doors
Let's go.
into our management services, which also super exciting, put us over the mark of 5,000 homes that we now manage. So we're actually a little over 5,100 homes now, to be exact.
Wow. 5,000 homes. First of all, that was a big goal, right? Like
Yes.
that was like a goal that y'all set out to accomplish. And it's like a big milestone to cross, right? You want to talk about a little bit about the goal and why it happened, or how it was communicated to the team and the relatives?
Yeah. I mean, this really goes back 5 years ago,
Mhm.
right? When we were 1,600 doors under management. And I started with the team back in 2019. And even when Greg and I were talking about this originally, he was asking me like, well, where do you think property management is going to be in the next 3 to 5 years? I was like, 5,000 doors. And his response was like, well, that would be great, but that's a lofty goal.
Yeah.
Here we are, 2023, and we've surpassed 5,000 homes. So something that we understand too. I mean, the really crazy part of that is 5,000 alone is a very substantial and exciting number. But then you think about that just in Jacksonville alone, and what does that mean for our team? What does that mean for our clients, for our residents? Everything else that goes behind that number of 5,000 is equally, if not more, incredible than the 5,000 number itself.
Let's go one by one, right?
Let's do it.
What does it mean? What does it mean to the clients?
Think about the knowledge base that we have built now, the footprint that we get to have in this market alone. When you go to other turnkey providers, or if you're considering doing this yourself, there's so many unknowns, right? Like, this is real estate. This is a home that you're looking to purchase. And with that, it's, well, am I going to be in, what area should I be investing in? What should I be looking at in terms of the neighborhood that I should be looking to purchase in? What kind of jobs are even in that market?
Mhm.
What would it go for rent? What should I be paying property? Like, there's so many factors that go into place that are ultimately going to have the biggest impact on your experience as a client. When we've been doing this for 17 years and have 5,000 homes right here, we take all of that guessing game out of that for you.
Yeah, peace of mind.
Peace of mind.
Yeah, peace of mind. Drew Barnhill, the ringleader,
Hmm.
put in the chat economies of scale, right?
Yeah.
Like it's one part peace of mind of like you are dealing with the 10,000 pound gorilla in the market that understands it very, very well, and leadership and really good data, right?
Yeah.
Like we talk about the data flywheel all the time. I think the thing that I find, within the what's in it for the client thing, the economies of scale of purchasing power when you need to, when you need to have some kind of maintenance done, right? Like the idea that you're not just calling a plumber that you call every 3 months or twice a year or whatever, but you're calling somebody that you give millions of dollars of work to,
Right.
the way that you get treated, the pricing that you get, that type of stuff, the economies of scale around seeing what's going on, like seeing around corners, right? Like the idea that you have so many maintenance people. What's the budget on? It's like, it was something like $4 million a month, or like $7 million a month that y'all spend in construction. That's like, those are, I don't know if that's accurate, right? Like I'm infamous about not knowing the number for real. I know it's in the millions.
Yeah.
I know it's monthly. And that to me is just like, bodies in the neighborhoods that you have homes.
Yes.
Right? Like
Yeah.
the more people that you have that are service providers to you, that are hanging around the home that you are invested in, that a fellow client's invested in, that JWB themselves is invested in, is somebody like looking at like, oh, okay, I see that, like having early signals, stuff like that.
Yeah, absolutely. And then name alone. So you look at onboarding 300 doors, right? The other really, really cool thing about this is when we do something like this, it's not just done on a whim. We have to think strategically. If we're going to bring on a mass number of doors like this, which we've done in the past, we've also learned by doing and scaling at this capacity to say, okay, 300 doors equates to how many property managers do we need to have on staff? How many maintenance coordinators do we have to now be able to service this? How many portfolio managers? So we internally also make sure that our structure is sound so that we can accommodate for this, because that could be really dangerous, right? Especially we talk about this marketing wise of this like idea of inflating on the front end. Well, same thing with property management. We could just not easily, but we could go around if we wanted to acquire other property management companies, we could do that. But if we still can't maintain the level of service that our clients expect and that our team deserves to be able to handle from a bandwidth perspective, we couldn't do that. So cool to look at it from that perspective too.
Totally. One of the big things that came to me in creating the class that we created, right? That's coming soon, is specialization of labor. Once you reach a certain amount of economies of scale. And to me, like when we're talking about from the client's perspective, man, you want that person that all they think about is moving this one metric.
Right.
They're likely going to move that one metric. As
And
opposed,
who cares what happens to the rest of the dominoes? Yeah.
well, yeah, I don't know about that, but yeah, but they're gonna do it, right?
Yeah.
Like having somebody that all they think about is renewals.
Sure.
Having somebody that all they think about is maintenance.
Oh, you mean internally in the team?
Yeah,
Yes.
internally.
Yeah.
Well, so that's one thing.
Yes.
Internally in the team, right? Like being able to like not the transition between having 5 property managers that need to care about like 20 homes each.
Yep.
And they're thinking about renewal, maintenance, resident experience, leasing, like all these different things versus one person that cares about this.
Sure.
One person that cares about that. And they're able to do it from a client's perspective, you're going to get better results.
Absolutely. And then when you actually go and you look at other property management companies, that's why it's very difficult for them to scale at this capacity, because they don't have the infrastructure in place to be able to put those measures out there. And they are burning, both ends of the candle, trying to have all of those pieces align. So
So economies of scale for the client, it's like you're going to move that needle. We're bleeding into economies of scale of why it's good for the team, right? Like if you're specialized, less chaos.
Sure.
What else?
One of the like near and dear things to my heart, and this, I love to go over this because this is something that I get the pleasure of sitting in on interviews too. New teammates will ask us in interview process, new clients will ask us during the onboarding processes, well, you guys are now at 5,000, what market is next? And I just think that it is so cool that, again, it's 5,100 homes in Jacksonville alone with still no intent to expand now into another market. It's not like, well, we hit this mark, let's go check out a new market. Jacksonville alone offers us a lot of ability, and just through 17 years of acquiring lots, we still have a lot of ability to expand here. But going back to the team impact, this is home. I'm welcoming my second baby here in July, right? So to know that we get to have such an impact here in Jacksonville, and to know that we've built a business that has a skeleton to be able to grow in this one place. Just talk about peace of mind there, right? For the team alone, where we get to live, work, play here and make an impact and grow as a company. That's just so cool to know that this isn't some big corporate thing where it's okay, now we're going to move you on to the next piece like a chessboard. So that's really nice. Like I said, the intentionality behind when we do make these kind of big growth moves, really thinking about the impact that it has internally to the team. I just had the pleasure of getting to sit in on the property management meeting. Oh my gosh. The breakdown of their conversations with our residents, where they know residents' first names, they know if there was a recent illness in the family, they know if a kiddo is starting school, if somebody's going off into there are such personal connections. And to be able, 5,000 homes equates to over almost 1,200 residents, right? So this ability for us to still have those kind of personal.
Over 12,000 residents.
Yes.
Yeah.
Math in that up there.
That's
I
right.
taught kindergarten back in the day, so it's okay. But yes, over that many folks
Yeah.
where we have these personal relationships and connections with the residents in our homes, and just be at this scale and still be able to maintain that. Like, we go back to our core values. That's
Yeah.
just how we are built here at JWB, is to have that be what's meaningful to us.
Yeah.
It's not just we track everything, there's data, but it's the relationship aspect behind it too, that you get to have working in one market alone that you couldn't do elsewhere.
Yeah. Peace of mind in the sense that you're not going to have to move somewhere. Peace of mind in the sense that you're going to get fulfillment from your work.
Right.
Peace of mind that you're like incentivized by things you care about
Yeah.
versus other metrics.
Sure.
One of the other things that I was talking about business coach, like I have like a business coaching call every Wednesday, and you may or might not know this, but I don't shut up about JWB all the time. So I forgot how we got into the conversation, but he was just like, what do you mean by like by next level of business model strategy and execution? And I'm like, you don't understand, man. They just passed 5,000 homes. This was something that 5 years ago, they set this goal because they knew that the real estate market was going to hit a certain point in the cycle where they needed to replace the new revenue from selling homes with recurring revenue from like management
Sure.
of homes. And what do you know? They hit it at the exact moment.
Yeah.
Right? Like,
Strategy.
just peace of mind of that your leaders know what they're doing.
Oh my gosh. You know what? And business planning starts in September, October, sometimes November. But I mean, it starts early on in the year to have this entire plan built for the upcoming year. And the four owners, like the amount of time and effort and the conversations that they have, what they have to constantly expose themselves to, and the team that they've built around them to allow them to go do that and
Yeah.
build really solid business plans,
Yeah.
and then allow the team to execute.
Yeah.
It's crazy when you think about,
It's badass.
yes, crazy in the best way possible. Like,
Yeah, it's awesome.
Yeah.
The conversation came up because when I introduced the golf tournament
Yeah.
on Monday, I was talking about this like intentional leadership,
Mhm.
right? Like I was talking about,
yeah,
man, real estate's been tough.
Yeah.
Like I came in here knowing of 3 big real estate outfits in town.
Yeah.
That make a lot of content and do a lot of stuff. They're all my friends,
Mhm.
right? And one is flipping, one is wholesaling, and one is turnkey property management, like vertically integrated company.
Yep.
The other 2 have had to go through these really big layoffs. It's
Yep.
been very painful, right? For the leaders of it, for the team itself. And JWB is sitting here, you're just talking about like, well, I was just on an interview call last week. Like you are still hiring,
Yeah.
you're still seeing, right? Like peace of mind that your job is going to be there because the leadership is there. And I'm saying all this not to say, yes, I am saying, look how cool JWB is because I'm a super fan. But I'm also just saying like, from the standpoint of wherever you're investing
Yeah.
and whoever you're going to deal with, like look for that economies of scale,
Sure.
look for the specialization of labor so that you know that you're going to get the best metrics.
Yep.
Look for the idea that you're going to have the right portfolio manager helping you out through and through because they're going to be there for the long term. You don't have to have that pain, right? Like those are the signals that I've learned to identify in this business as like something as an educated consumer that I would want to look for
Yes.
wherever I'm going
Yeah.
to invest.
And those are the questions too, that, and the more exposure I've had on the sales side now, I love the folks that come to us and they ask about the intentionality behind our decision making, whereas you don't always hear that, right? And to be able to drive people's attention and focus back into the why behind all of these decisions being made, you see that through, everything that we just talked about from team and client experience, but every aspect of the business, there is intentionality, and you're never really faced with that. We're throwing the spaghetti on the wall and hope it sticks,
Yeah.
right? Like we wouldn't expose our clients to that.
Yeah.
We have built a part of the business. Alex is a perfect example of everything he does with our innovations team, where
A real spaghetti slinger.
that is pasta, watch out. But, we've insulated that to a small part of the business to allow that to do its thing, right? To allow him to thrive where he thrives, while the rest of the business is insulated to really ensure that we are performing on the 98%
Yeah.
piece of the pie here.
Yeah. Cool conversation. I feel like we talked about it for 20 minutes and it's awesome. And I could talk about it forever. Specifically this idea of like insulating, like as a business, you still need some spaghetti flinging. Right? Because you
Absolutely.
got to be testing what's next.
Yes,
and you
a
gotta
turnkey was a spaghetti fling at one point,
Yeah.
or a new construction, right? That
Yeah.
was this idea of build to rent. That
Yeah.
was an idea that we had years and years ago to see if that would work in this market. And that has now turned into the
Correct.
hedgehog of the business. So you're absolutely right. It is needed, but you also have to do it strategically to not put your clients and your residents at risk.
It has to be contained
Yep.
in a way that is strategic to the business, and it's not just about Alex thriving. It's about he's bringing max value to the company by being
Exactly.
able to test this stuff out and see 10 years down the line.
Yeah.
I love it. I love it. All right. So I guess we can then move on to the property. There's more breaking news, Kate. What
There's
is
more breaking
what is
news?
happening in the mortgage world right now?
Well, I wish I knew, Pablo. I wish I had the answer to just give everybody and the crystal ball in front of us. But something that is really cool. So if you have worked with us in the past or you've had any onboarding call, one of the first things that we tell the folks that are potentially looking to buy with us is that we do ask you to work with one of our lenders. We don't lend in-house. It's not anything like that, but we do have a network of lenders. Hannah is our closing coordinator. She's fantastic. I know she's been on the show briefly in the
Star of the
past,
show.
but she has the ability to communicate with these lenders on a weekly basis. We can ensure that, the rates that we're getting are competitive. We know the rates that we're putting in front of our clients. All of that to be said, two of the lenders that we work with are actually offering something that I think is pretty neat right now. With the volatility with interest rates, there was just a change yesterday. Two of our lenders, Highlands Mortgage and Cross Country, are offering specials right now to be able to refinance without lender fees down the line. So for Highlands Mortgage specifically, they will waive the lender fees at post-close 1 to 3 years post-close from today. So waiving those lender fees, and then Cross Country, they're offering a credit to go towards those lender fees in the amount of $1,500 if you buy before July 15th. So if you're looking to conventionally finance a property, we were just talking about this with the service team where it's date the rate,
marry the asset.
Yeah. So if you wanted to date the temporary rate and then refinance in a couple of years, if rates do, drop, these two lenders are offering these credits to be able to do that without the lender fees.
Super smart, right?
Yeah.
Like I feel like such a brilliant business move by them.
Absolutely.
And it makes me, I was telling you before the show, right? Like I've been talking about it for like maybe 3 weeks or so. This idea that my outlook on investing right now is the world is going to get crazy over the next like 1 to 2 years. But I'm pretty sure that in the next 5 years, it's going to be somewhere back to like a stable normal of the things that we can count on. And when I look at what I would put my money into, if I was looking to put money somewhere, I would want to have peace of mind, like lay my head on the pillow at night, good feeling over the next 2 years, and then long-term growth over the next 5. And I look at the stock market. Yes, I think over the next 5-10 years, stock market's going to end up growing, but peace of mind over the next 2 years, nah, dog.
Yeah.
Bonds right now, it's like I'm losing to inflation every single day right now. So like crypto, forget about it, like no peace of mind. Whereas so my theory was, and what I've been telling, friends that I talked to, like my buddy Greg Buckland, who we went on a run and talked about this, like this is when I came up with the theory, is the idea that my thesis for like where to like put that long-term money that you want to build your wealth with is just get in real estate right now. Like get in. Yes, the mortgage rate is likely going to be lower in the next 3 years. So if you get in right now, you start accumulating the debt pay down, you start accumulating the appreciation, you start getting the tax savings, you are going to be positive in cash flow, and then just get in and in 3 years refinance as opposed to waiting, having your money either lose value because of inflation or go down in the stock market because of whatever is going to happen, and then trying to get into real estate after it's all fixed. Prices are going to be up.
Yes.
Rates might be down, but prices are going to be up. Competition is going to be up. So it's like what they have done is essentially made it really easy to execute on that, which makes me feel smart.
Yep. You and I talked about this, and I would love to bring this to the audience here. If this idea of timing the market, right? I think there is a little bit of skepticism still out there in terms of just what's about to come, right? And nobody knows that answer. But I don't know if you've ever asked anybody the question on, do you regret buying that piece of real estate a year ago, 5 years ago, 10 years ago? And if it's very rare that you get a yes.
Yeah.
Right. So, and then you look at the span of what interest rates have truly been
Yeah.
over the last 40 years, over the last 30 years, compared to what they are now. I know it feels high. It does compared to historic lows
For the
that we
past couple of
had,
years, yeah, for sure.
but we're not going to get back to that historic low
Yeah.
rate. And the Fed is making that very evident right now through what we're experiencing this year, right? So to still be able to think about this as a long-term play in this moment of time and be able to take advantage of something like this, where, you know, the lenders are offering these kind of incentives,
Mhm.
it still makes so much sense to be able to utilize an asset class like real estate, lock into the mortgage rate that you can, that is fixed. And like you said, in the background, your equity is growing, your rental income is growing as rent rates continue to appreciate. The growth of Jacksonville is not slowing down, right?
Appreciation is going to happen.
Yep.
Yeah. And that pay down is going to happen and tax savings are going to happen.
Yeah.
I think even more than like, did you regret buying the house back then? I think the question that you get 100% answer on is like, hey, person that said, I'm going to wait to buy real estate.
Yep.
Do you wish you would have bought it the day that you said you were going to wait to buy real estate?
Exactly.
That one is 100%.
I should have waited longer.
Yeah. Nobody has said I should have waited longer
Right.
to buy an investment property or like get into the game.
Exactly.
Whatever, right? Like, or at least I haven't heard that, which begs a question,
Yeah.
right? Like we're going to go into the property of the week right now, but what's the question, Kate? What's the question we want to ask everybody?
Well, I want to know from you all, right? Like those that are really considering making this investment right now. And we know that not everybody's in a position to do that that's with us, but those that are, what's the hesitation? What's holding you back? What is it? Because those are the things that I would love to be able to really talk through, and especially with, you know, my sales squad to just have that insight into what is the biggest hurdle that you're afraid to try to jump over right now when it comes to getting into this asset class.
That would be super valuable community, right? Like if you're here on the show live and you're somebody that is having that internal dialogue,
Yep.
Should I wait?
Yep.
Right? Like I know that there's going to be a percentage of y'all that are like, well, I just don't have the capital right now to get
Exactly.
into it, and I'm just tuning in. But I'm sure that there's a percentage of you that are wondering, you're like, I have this money. Do I move it from the market? Do I get in? Do whatever? I would love it if you put it in the chat or you DM Madison or whatever you want to do. Just let us know that, because it's going to help us understand how to make more better educational content and stuff like that. So that is Kate's question of the day. You got a segment.
I love it.
Yeah. All right.
I'll be back next week.
So now that we're doing that, somebody asked, was that for refi or new purchases? It's for new purchases,
Yes.
right?
Yeah.
So if you buy a new purchase,
You just have to close. The only caveat for cross country was if you close before July 15th.
got it. So to recap, 2 of JWB's approved lenders right now have a program where if you buy a property right now, you invest in a vertically integrated turnkey rental property right now, you get today's rate and you get basically free refinancing within 3 years. So if you think that in 3 years, the rate is going to be lower, but you were not doing it because you thought that maybe the closing cost of refinancing the loan was going to kill the profit on it, they've taken that off the table. You can invest in something right now, ride out this recession, and when interest rates go back down, you can refinance essentially for free.
Yep.
Pretty badass. All right, cool. So JC's coming up with some good feedback already in the community. Keep it coming, y'all. Lee's telling us, I hear people are afraid of the loan rates. Hesitation is lack of cash flow. Keep that stuff coming. We're going to catalog it. We'll make a whole show about it. In fact, next week we're doing a show about like, does ChatGPT give good investment advice?
Oh, cool.
So we can pop it into
Yeah.
there. Yeah. All right, Kate, you ready?
Love it.
Because we are about to magically whisk ourselves away to 2234 Kistler's Ridge Way,
Back, baby.
Jacksonville 32218. We're looking at a purchase price of $275,000, monthly rent of $1,723. It's a 4-bedroom, 2-bathroom house, 1,456 square foot. Construction, it's finished on this new construction home here. It's going to have an average duration residence stay of 4.5 years, which is what JWB gets historically, data flywheel style, annual appreciation, best in class here in Jacksonville for cash flow markets of 4.6%. And what actual not your average investors really look at is this IRR of 12.66%. I know that GC is not here, but Kate, what do you love about this property?
I thought you'd never ask, Pablo. I did that just for you.
Thank you.
Well, what does this look like, Pablo? This looks a lot like last week's property of the week.
It does. I feel like I'm having a deja vu here.
I know you're not. I'm not Greg. There are differences.
I knew it.
Yes. Yes, this is another home in the Kistler's Ridge community. And I just think that it is really cool to be able to spotlight the fact that this is another home in the Kistler's Ridge community. So the idea of us being able to kind of rinse and repeat with this process, right? We talked the first, 30 minutes of the show about the intentionality and our processes and everything in place. And this isn't a strand of spaghetti, right? That we flung. This is something I'm pointing
Yeah,
at.
this is a big old pot of red sauce.
This is Prego roasted garlic and herb, baby. This is the epitome of where we have learned what works and we repeat it. And that is what we are putting in front of our clients. So that's the big thing that I really wanted to spend some time talking about is, so many of the folks, and again, kind of going back to the sales side of things, when we're having these conversations with people and they come in, and it's understandable. I understand why, but they come in really hot and heavy of inventory. And we have to just say, oh, yes, we will get there. But there's a reason that we don't just put every available property for sale on our website. There's a reason that we take our clients through, if you're a new client, through 4 onboarding phone calls and a demo and a buying plan. That we do all of that because by the end of that, you're going to start to see all of these properties as widgets. You're going to see, and we've seen it time and time in the Property of the Week show here, that the return expectations are going to fall within the same range. The purchase prices are going to fall within the same range. The neighborhoods are going to be in the same 4 core locations in Jacksonville. Those things, that's a process that we have built upon here because we know it works. And that is what we are putting in front of our clients. And that's exactly what you see here with Kistler's Ridge. So amazing asset. Clearly it's new construction, very desirable. You've got 8 other JWB clients that purchase in this community alone. So I know last week we talked a lot about the folks buying in this neighborhood, but we also kind of interchanged that idea of like what's considered a neighborhood. And really, when we talk, where is this property located? And you guys talked a lot about the west side and the jobs that are there and Amazon distribution center, Cecil Airport, all of those things on the west side. But then just specifically within this Kistler's Ridge community, you've got 8 other clients that have already closed on their properties there. So just a really cool testament to the fact that this is a process that we know works and that we're going to continue to put in front of our clients.
Yeah, back to the economies of scale,
Yep.
right? Like you think of this giant factory making widgets,
Right.
And the widgetization of a rental income property is a truly novel idea.
Yep.
Right, like that's probably why you have to have so many conversations about it because people aren't used to it.
Yeah,
But
I always say it's atypical, but if we really put our focus on the things that are going to matter in terms of how we are going to act for you as the operator and how this market is going to perform over your expected 10-year hold, which is how we're mapping out that 12.66% return IRR over, your 10-year buy and hold strategy with this kind of asset. Wouldn't you want to align yourself with somebody who's been through that in that market over, over the last 17 years?
Yeah. The data flywheel is like right at the center of all this stuff, right? Like shout out to Tara, mother of flywheels.
Yes. Oh my gosh.
And the idea that you have these 5,000 data points of how things perform, and the reason why you can count on those data points is because you have normalized the variables all the way around it, right? Like the idea that they're in the same neighborhoods, they have the same kind of residents, they have the team that knows, like what the metrics to push and pull for to maximize return for investors is the big thing that you're betting on here, right? Like this, like widgetization. And you bring up the idea that we've talked about the same way that we talk about risk reduction in real estate is an asset class with risk reduction. There's risk reduction in a city that is growing, right? Like that reduces the risk profile of the real estate itself. And then there's also risk reduction inside blue collar workforce housing.
Exactly.
Reduces the risk. There's further risk reduction in the idea that like, you're not just investing in the same neighborhood as in the west side, and also the same block as 8 other people. Right. Like all those things, reduce risk.
Absolutely. I mean, you think about what are the biggest factors that are going to hinder your performance from an ROI standpoint: maintenance and vacancy, right? So what is one of the biggest differentiators of us and what is one of the biggest things that is in our control to be able to help reduce that for you on the front end? Long-term leases. The property of the week last week already sold, which is exciting. Shout out to Max on the sales side, but a 3-year lease was signed on that property. So when you're looking in terms of why are we here, rental demand and folks that are willing to commit to that type of lease on the front end, that's, that client is closing on that property with a resident who has already committed 3 years.
That's a really good point. That's a really good point. The house next door leased for 3 full years right off the bat means that there is a higher than average rental demand in that neighborhood for people that want to be there long-term and want to have a good experience from the top property management company in the area that they live in.
Exactly.
That's a big deal.
Yeah.
That's cool.
Talk about deferring your risk. I mean, that's just the initial lease term, right? Then you've got the incredible property management team working where, we talked again about your true property managers, their main focus, collecting rent and renewing leases. So on top of that, if 72% of our leases are being renewed, that's just that 3-year initial term. Then if we can renew them, how long are they going to stay on top of that? That is deferring your property turn cost. That's deferring putting it on the market and having vacancy. If we can control that on the front end in areas that we know it will work, that's what we're going to do for you every time.
Yeah. And that makes me want to bet the over on this average residence stay of 4.5 years, right? If someone's walking in with a 3-year lease, you generally only sign 2 or plus. I'm assuming that that's going to be 5+, right?
Yeah. I mean, but it's going back to our core, right? I mean, this is us also showing you to get you into this asset class, at these expectations. That's how our deal evaluations are built. It is a reflection on how we can get you to that return expectation into this asset class with these controllables. And I just think that is it. All of the additional things that the team is doing in the background that goes back into, you can find another new construction property in Jacksonville, but can you find that experience and structure and peace of mind behind all of that to feel confident that you're even going to get your 12.66%?
Yeah.
And that's something that with a lot of other providers, that's not even tracked. It's kind of like, hey, I put this in front of you.
It's not the norm.
It's not the norm.
Yeah.
And so beyond that, the fact that we're going to put this in front of you and then we're going to hold ourselves accountable to it. We're going to give you access to a tool that you can log into every month and actually see how you're doing. We don't have anything to hide behind there. So it keeps us really accountable too, in terms of what those numbers are.
Yeah, that's awesome. As you're talking about all of this, again, since we're in this class launch cycle, and it was actually a really good process to record that class, because it's a great reminder of back to basics of why this thing works, what people need to know, stuff like that. One of the big, I don't know if I'd call it an aha moment, but it's a moral of the story here is the idea that people buy this asset class wrong, right? They spend 80 to 90% of their time worrying about what's the property I'm going to buy. And then they go they fall in love with this property. And then they're like, all right, well, now I just got to get 3 quotes for property management. And okay, well, I'm happy it's in the city.
Sure.
Right. Where it's Gregg said this analogy on the class of just hey man, 4 years down the line, when you're on the kitchen table wondering whether or not you have a little bit of a blip in maintenance or something like that, and you and your spouse are wondering where you want to stay in here, you're not talking about how happy you were when you bought it.
Yeah.
You're talking about the ongoing experience, how much you trust your team, and that's going to last for the 10, 20, 30-year hold that you're going to do. So flipping the buying model on its head of just where are there property managers that align with your goals, can give you proprietary data of a widgetized kind of experience that you're going to have over the next 10 to 30 years, figure out where those teams are first. Then once you know where those are, then you're okay, does the market have the dynamics I want? Does it have the growing population? Does it have this availability of inventory that I want? And then once all that once you figure out, then, okay, is it a growth market or a cash flow market? What am I investing for? You make those decisions. And then after that, it really does become okay, well, I'll just take that one.
Yeah, exactly. I mean, and that's what I think is so cool. When we're explaining the onboarding process to these folks that are coming to us, early on in the stages, it really is. I have so much fun explaining the onboard process to them, because even like what we're having here, Pablo, I mean, how much have we gotten into detail specific wise about this property? Very little,
Very little.
because it all goes back to how are we going to take care of it for you on the back end and hit those numbers.
Yeah.
And so when you find somebody who understands like, oh man, you guys care about my goals and you care about making sure that I hit this number. And that's what's going to make our clients too want to come back and buy more with us and refer their friends. And if that's how we are able to grow and expand, then we're doing something right. But I don't know. It just makes me so fired up. I love talking about the fact that if we can truly convey ourselves, and that's our job as a team, that's our job as a sales team, to really make sure you guys feel really good about what we are putting here and the why behind it. And if we can educate people more on the questions they should be asking when they are looking to make these kind of buying decisions, then we're doing a good job.
It reminds me of a conversation that I had with somebody recently on a podcast, right? Like on my own podcast, I had this guy, Ethan Butte, the chief evangelist. He said something that really struck out to me. That is, warmth begets trust, trust begets competency, right? So it's like this idea that the whole game here, since we are giving advice of doing it differently than most people, because most people don't succeed. It's the people that do this that succeed.
Right.
Takes a lot of like, hey, you got to come in here and like understand that you can trust, right? In order to do that, you got to be available to them. You got to talk to them in the language that they speak. That's a big reason why we have the show, why we have the podcast, why we have the community. So you don't have to hear it from us. That's the warmth part. That means that then you can trust the numbers and trust the commitment to this thing. And then, once you believe all that, then you'll believe the competency. Then you'll believe this intentional leadership and the economies of scale and all this stuff has happened. That's when you actually believe it. So I love that you brought that up. Let's answer a couple questions here. What do you think? First of all, JC asks, is this already leased? From what I understand, this is just like on the market right now.
Yes, this one just, I think maybe yesterday, just got released to market. The property that was on last week, the resident just signed a 3-year lease.
They just signed a 3-year lease. Okay, so this will be leased before you actually own it. It will be leased. You'll have a 2 to 3 year lease. Eddie Harris from Hotlanta asks, in a new 3-year lease, how much typically is the yearly increase?
Yeah, it's a great question. So it's going to be, it's going to tier. So $50 to $100 per year. And the resident is aware of that on the front end. So it also, there's a couple of things that factor into that. The amount of the initial lease signed in terms of what their rate was and the length of time. So it'll differ if it's a 2-year lease or a 3-year lease based off of what that initial increase will be. And then at time of renewal, so when the actual lease comes to an end at that time, that's where we're also going to reevaluate what market rent is, get them up to market rent so you're not missing out on that, and then determining what the next increase would be beyond that. So it's it just depends on the length of initial lease that they sign, if it's a 2 or a 3-year lease, and what that initial rent rate is. And then from there, we're going to scale usually between 4 to 6% per year based off of what they sign up to on the front end.
Love that. So when you sign a 2 or 3 year lease, you're not giving up rent increases.
Correct.
You're just making it clear for the resident to know what's going on for them. And that's what's in it for them.
What they sign on to in the front end. So they have it is in front of them. It is written out on their lease at year 2 or year 3. This will be your rent increase, and they have to they have to sign off on that. And then again, at time of renewal. So when we're having those conversations with the property management team, trying to secure a rent renewal, we will be 3 months in advance starting to have these conversations with residents. And we're looking at the market data too, to start preparing them in terms of what market rent is and what they should prepare for when they sign that renewal.
Another signal of a business model based on peace of mind, even for the resident.
Right.
The other thing that we talk a lot about on the show is this idea that in order to create that peace of mind for everybody, maybe you're not jacking up the rent the following year, right? So maybe you're leaving a couple of pennies on the table, but that pales in comparison to turn costs. Right. So what you gain as an investor is the idea that like, okay, I know that I'm gonna increase the rent on a yearly basis, or even on a 3-year lease. Maybe you don't increase it year 1, but you do in year 3. And then when the term renews, then you bring it back up to market rate. And that's where you bring it back up. And yes, maybe you're not going to get every dollar you can out of rent for 1 year, but maybe maybe that means that you give up $200, $500 in revenue that year, but you're also mitigating the risk of like the $6,500 turn cost.
Well, I mean, and beyond the turn cost, right? So I think there's the differentiation there between market rent and what you would also be exposed to from the new tenant placement fee, which is going to be equal to first month's rent, right? And the time on market. So to be able to have that period of vacancy where you're not earning any rental income because now you're trying to turn, get a new resident in place. So that's where the numbers are going to be in your favor to keep one resident in place longer versus the turn and burn and try to replace every year, because the mindset is, well, I just want to up to market rent every single year. We can still have that escalator in place from initial lease sign while also securing more consistent income for you and deferring the turn cost and the tenant placement fee.
Yeah. So maximizing long-term wealth creation
Correct.
as opposed to like short-term cash flow.
Right.
Yeah, love that. Conrad Gastoni. I think that's a new name, Kate. We normally we say new name. Welcome, Conrad. Good to have you here. Has got a good question, which also Jen had at the golf tournament. And spoiler alert, we're going to make a whole show about this in the next quarter or so. But Conrad is asking, how does a typical exit sale work? Is there a resale market within this community?
The community in terms of Kistler's Ridge specifically, or
let's just explain how an exit sale works.
Yeah, I mean, so really what we would want to do, we plan this out and the returns are planned out over a 10-year hold strategy. The reason that we're doing that is because in order to get you to that 12.66% return, right? We're also spanning that out over what's actually hitting your bank account and taking those averages over those 10 years. So when you look at the cost to acquire the property, taxes that go into it, your ability to grow the net rental income piece, your ability to grow the tax savings aspect of it, to have your resident pay off your principal, right? All of the profit centers that go into place with this, the 10-year hold is what we encourage folks to do. Now, if things happen, we understand that things will happen. If you are planning on selling the property before that, or most of our clients get to the 10 years and they're like, why would I stop now? I mean, let this thing keep growing in the background. It's
Just
pretty
got
much
to the
paid off.
Yeah, get into the good part.
Exactly.
Right? Yeah.
Yes. But in the event that does happen, our team, you'd be set with a portfolio manager. So that's your dedicated point of contact here at JWB. We have amazing relationships with realtors, so we would help get you set up for that if needed. So.
Yeah. And I think it's important to produce the business model is you own this outright. So
Correct.
Conrad, like
yes,
you're getting advice right now on a minimum 10-year hold, because we believe that you want to buy and hold this asset to really perform long-term and it normalize the risks. But man, you can sell this thing tomorrow if you want. Like
it's
I can sell
yours.
anybody. Yeah. You can do whatever you want. So now his question is resale within the JWB investor community. Is there a resale market within the community for that? What's your answer for that?
It's the same process, right? So it very rarely would we, and it's not that it hasn't happened, but this isn't like we're going to look at every opportunity that a client is taking to sell their property to add back into JWB's inventory to then resell. It has happened. It's a way that we can acquire properties and grow the portfolio there. But most of the time, we're going to talk through with you in terms of what's the reason for you wanting to sell? Or do you really have a clear picture of how the property is performing? How are we doing on the management side? If, we still feel confident that that's the decision that our clients want to make, then we're going to set them up with a realtor. It's not internally JWB's realtors that are going to.
Yeah, correct. And Conrad, one thing that when we get this question asked, one thing to think about is like, once you have this property there, your best option for exit will often be to sell retail, right?
Yes.
Like you want to sell to an owner occupant who's going to pay you market price for that property because they want to move into it and make it theirs. So inherently, you probably aren't going to sell to another real estate investor inside the community because you want to get the most for that property possible. An investor is always going to go in there thinking what value can they add to it to then like turn that thing around, right? So, and you're living in these neighborhoods where there is people that want to buy and live there, right? So the idea is it's your asset. You can do whatever you want. JWB is going to give you the best advice possible. They're going to set you up with the best realtors in the area that they work with, that they do this. The idea that you're going to sell it to another JWB real estate investor is for sure there because there's people wanting to do this all the time. But for you to maximize your return, you're most likely going to end up selling it to an owner occupant.
Yep.
right?
Well said.
Cool, sweet. JC has another question. Can you talk about zip code 32221 versus 22210? Are you up on that, Kate?
Well, I don't know if my answer is going to make him happy or her, but really when you go into specific zip code comparisons, my answer is it's kind of getting back to the housing conversation, like property specific is there's not going to be too many things that are different. So in terms of like the very specific zip codes, everything that we have is going to fall in line, if it's a north side property or if it's a west side property, the factors that we're looking at in terms of why we're there are the exact same. So the only differences that you're going to have are the specific employment opportunities, but be rest assured that employment opportunities are there. So north side, where you might see, the ports, you've got downtown, even if it's not urban core, you still have the ability in terms of all of the employment opportunities directly downtown, but port system alone, that's going to be the biggest factor for us there. Whereas west side, you're starting to see more of those Amazon distribution centers, Cecil Airport, NAS Jacks. But the beautiful thing is, if you love one, it's easily accessible. We've got the Beltway, the interstate that connects everything to one. So I guess I don't know if that really answers the question specifically, but when we start kind of comparing it, a lot of clients, sometimes if they're already a client or they already own Jacksonville properties, what they say is, well, I've got a couple on the north side. I would love to diversify into the west side and things like that. But when you're making an initial investment and you're looking at where you want your property housed, the questions that we should be asking is the rental demand there? How much am I going to be able to get for rent? And is it close to employment so that my residents stay as long as I can possibly get them to stay there?
Yeah, I guess the overall theme there is if JWB is offering it, it has been widgetized.
Correct.
Right?
Yes.
Do you have, I know like a lot of like real estate people here, like, no, like when you say 2-1 or 1-0, do you have that in your head? Like where each one is?
I'm visual to a fault, and I have at my desk, I have the Google map of all of the pins of all of the properties that we have sold and managed. And then I have just kind of drawn out the little sections of zip codes. But I focus less on the zip code and more on like the west side pocket and the north side pocket. And so those four big pockets.
Me too. So I don't know what the zip codes are, right?
Yeah.
A lot of people do.
Well, and it's even beyond that now, when you're even talking the four big pockets, now it's like Paxson and Cedar Hills and there's even all of these little sub neighborhoods. So I just try to stick to the same big.
Real quick, JC is asking, does JWB take a commission on investors selling their property? No, right? They just refer you to a realtor that will likely take a commission.
Correct.
What again? This is an awesome name that you have put here. You put your titled as what again? And I love it because you're asking great questions about the community. How many houses total? How many were already built and rented? So this person's asking about Kistler's Ridge Way, that neighborhood, that community itself, which has an HOA. Do you know the numbers of the total houses total?
I don't know total. So this one is a little bit different. So we always talk about the fact that our business model is really built around infill lots. So typically what we're doing and what we've been doing over the last 17 years is we are purchasing infill lots. So these are lots that are already in established neighborhoods. And then we either build new construction or where we are getting the purchasing the properties to renovate. Kistler's Ridge is a different scenario where our builder, ACH, built out the entire community. So Richard Briggs with ACH, they decided, we were able to onboard a certain number of the properties within Kistler's Ridge to be able to sell and manage. But there was also some of those that went retail. So it's a little bit of a different community. So I don't have all of the specifics, but everything in that community is new construction over on the west side. So I don't know the exact breakdown in terms of how many sold and he kept in his portfolio versus what JWB had.
So that HOA has some owner occupants as well.
Correct.
But the majority of the, I assume that builder de-risked his sales by like putting it into JWB's inventory. And that means that as far as an HOA goes, it's de-risked in the sense that if you have a large portion of the people in the HOA that are real estate investors as opposed to owner occupants, and they're all kind of on the same program, aka all JWB renters, then the decisions that are going to be made by the HOA are going to be to maximize the returns for investors, as opposed to like, we want a gate over here or a pool over there that doesn't actually drive returns and
Correct.
higher occupancy for investors.
Yes. And then to answer Lee's question too about the cost of the HOA. So it's not going to be, you're not going to see it on every single one of JWB's properties. In fact, most won't have it, but if they do, we're going to put it into the return of the property evaluation for you, but it is an expense of the owner.
Yeah, it's an expense of the owner, correct. And it's already baked into this IRR.
Exactly.
anyways,
So
right?
when you're looking at that overall return, we are already accounting for that in there.
All right, cool. Official last question from the community. Our fiduciary financial advisor, real estate nerd, Kelly Barenbaum, is asking on this topic, has JWB thought more about building for owner occupants in neighborhoods where they own lots, but that don't economically work for rentals like Springfield?
That's a great question. So we talked a little bit about, we have a department, our innovations department, and one of the things that they're focusing on is land development. So it's really cool to be able to have built the business and have this structure to have a set department where we can kind of start to utilize these larger lots of lands where you can do this. And then we can do some of the horizontal work and make the decision at that time. Does it make the most sense to build a build to rent community here? Does it make sense to sell to another builder who wants to take it on beyond that and didn't want to do all of the horizontal work and the permitting and all of those aspects? So it's a very small part of what we do. The majority, and we aren't planning on changing the business model anytime soon, is to stick to those infill lots, because going back, those are going to be the areas where we know this is working, where the rental demand is there. You aren't, when you've got also, we have a lot of homes right now in our available inventory for sale that are renovated properties. It's not like those are the properties that stand out on a block because they're renovated homes, right? So these are areas that are already established, and we continue to grow there because that rental demand is there and because your purchase price can be a bit lower with your higher rent rate that you can gather.
Yeah. And I think it's also important to say that, JWB has tried the lease to own and stuff like that, rent to own, and it doesn't end
Yeah.
up being a good experience for the resident, and therefore has decided not to do that.
You've got to weigh all of the
Yeah.
impacts that has. So you think about, again, what it is that you're looking for in terms of, if, it can seem very desirable just at first glance of this brand new construction community. And while there are several benefits and factors, I'm not dismissing any of those, but you also want to make sure that you have that diversification in your portfolio, and the things that are really going to be able to help you hit those return expectations are still there. So there are limited areas too where that can really work out. So yeah, I would say that there's no change anytime soon in what our business model is, which is going to continue to be that infill lot.
Last question, not by the community, personal question. Kate, when did you become such a freaking expert in real estate, man? Like, you just crushed it.
Goodness me.
Like,
Well, I
that was
appreciate
awesome.
that. I appreciate that. Yeah, no, it was a lot of fun. Like, I don't know. I'm so passionate about this. And I love that I've gotten to get to the position that I am in this company to be a cheerleader like I can.
I mean, not just a cheerleader, like a subject matter expert. Like, that was really impressive how you answered all that. That was awesome.
Appreciate that.
Yeah. All right, cool. So thank you to the community. Really great questions today, right? Like, we've taken all your questions. I want to shout out to Eddie. I want to shout out to JC, Michael Santorios, giving us really, really great, Walt Hart, giving us really, really great suggestions of what the fear part is.
Yes.
Because next week's show is ChatGPT versus GC. Does AI give good real estate advice? We're going to take some of the questions that you submitted. Keep those coming. If you want us to ask more questions that we ask ChatGPT and you want to compare it to GC's advice, let us know in the community. Go to jwbfacebookgroup.com. Let us know there. Shoot us an email, DM us, whatever you want to do. We'll pop it in there, and that's going to be a really, really fun show. I really want to thank you all. I would never take for granted this idea of Thursday, middle of the day, work day, 40 plus people come in here to just like make our job easy, ask great questions, help each other out in the chat, give each other really, really great advice. Really awesome. And I want to thank you, Kate. Big time step up. When GC couldn't make it, you showed up, you crushed. I think we're pretty close to replacing him completely with you.
Just a couple steps left. I don't know. I guess joining Thursday runs.
Yeah, Tuesdays and Thursdays.
Now might not be the ideal time to start that.
May not be the best time to start that. So he's still got a little bit of time.
Okay. All right. Let's let him have that.
Yeah. Any final words for the community?
No, I appreciate this. I get to look at this too from the standpoint of where we started before this was the Not Your Average
True.
Investor Show. And this was Gregg and I trying to make webinars, and it is absolutely incredible to not only have a studio to sit in to be able to do this, but get to work alongside you and Madison and see how the team has grown. And then to have this community of folks that are so active and so passionate about having these conversations with us. It is so special.
It's the best.
Yes.
It's the best. Yeah. We're just talking about, this is the studio that you all built.
Yes,
Yeah,
absolutely.
Yeah. Very, very cool. All right. So join us on Tuesday. Start thinking of great questions to ask ChatGPT versus GC. And in the meantime, do me a favor. Don't be average. See you on Tuesday.